Hey there, we're live. It is April 4th, 2024. Deribit live with Rogue Traders. Hey, if you are one of those people out there who are thinking, oh boy, what if Bitcoin goes down? What if it just sits here for the next 6 months? What if this whole hype about Bitcoin doesn't pan out until 2025? What are you going to do? Well, that's what we're going to discuss today. And we do have some of those thoughts ourselves, maybe not that extreme, but we do have some of those thoughts. And what's our goal going to be? If we're long-term bullish, but short-term, we could be quite bearish. We don't want to get hammered. So what is our strategy going to be? Stick around, and that's what we're going to talk about today. All right. Next thing I want to mention is we did have a screw up, same screw up as we had last year on time zone change. The email went out. It did get changed. Our time got changed. Annoying, but sorry, here we are. So for all of you that logged in an hour ago, what can I say? We screwed up. So let's get to it. We've got, we always have a lot to talk about. We don't have a lot of trading to do today, which is kind of interesting, which is actually good for us because we want to trade as little as possible because it means that we're, we've done the right things. We don't have to monkey with anything. So that's going to be quite exciting. So let's just take a look here at the schedule for today. Current market analysis. As always, we're going to look at the markets. We're going to look at some charts. We're going to do some live trading if there's any trading to do in both our synthetic miner account and I don't want to call them shit coins. I'll call them altcoins. Those are so Deribit has just launched Matic Sol and XRP. So we put some positions on last week. We're going to check in on how those are doing. It's going to be kind of fun and interesting as we kind of grow and evolve with Deribit, and hopefully they'll get more and more liquidity as we carry on. And then, of course, we're going to talk about, this slide didn't get changed again. We're going to be talking about what to do if Bitcoin does not go up as people anticipate it to do, or it doesn't do it in the short term. What are we going to do? What are we going to do? Move down to 40,000 or something? Oh my gosh, right? A disaster? Well, it doesn't have to be. So let's talk about strategies. So before we get into that, here's our results, and we're going to jump into these charts, into these accounts in a minute, but I just want to give a summary of what we're doing. We have the synthetic miner account, and we've been trading that now for 5 weeks. If you remember, if you were with us 5 weeks ago, we actually opened the account, we transferred USDC to Bitcoin, and we did all that stuff. So this account is designed to just generate more Bitcoin. That's all we're trying to do there, because we've got this long-term positive upwards orientation. We're bullish long-term. So we're starting cash was at 0.0825 of a Bitcoin. It was about, $5,200 at that time worth of USDC. Current Bitcoin cash is about the same as last week at 0.0916. Our equity down a little bit from last week, 0.0872, but still higher than 0.0825, what we started with. So how much Bitcoin have we mined? 0.0047 of Bitcoin in 5 weeks with this tiny account. So we're up almost 6% from we started 5 weeks ago. And you can see the cash. We're up on USD cash. That's nice. Our annualized return is almost 200%. Nice. And it's going to fluctuate. As you're going to see, it's going to be a pretty widely ranging needle. That's cool. USD HODL annualized return is 52.8%. And the cost of mining is about half an hour per week. That's generous. I don't think we spend half an hour per week on this account, but we had to put something in there. Week, right? Yeah. So that's it for the intro. Hey, actually, April 4th, that's the day Martin Luther King was killed by the CIA, I think. Huh. That's what thing sticks in my head for April 4th for some reason. I'm pretty sure that's it. If someone can correct me on that, maybe I'm wrong, but it was bugging me. I knew something about April 4th. All right. As always, if there's any, so we're going to have a Q&A session at the end of the call. As always, if there's any questions, please just dump them into the Q&A section of your chat. So let me, Richard, if you could stop sharing the slides, or can I do that? Because sure. Oh, here I can do it. It's okay. You uploaded it, but I can control it.
Let me share my. Oh, you just do it.
No, I'm going to jump into the charts first.
Oh, okay.
So let me just do that, and we're just going to see where we're at here. Screen share. There's charts. Excellent. Here we are. I'm not even going to look at what the heck is all this stuff? Oh, I see. Okay. You can see my chart?
Yes.
Excellent. So I said last week I was going to leave those EMAs on. I don't mind them there. They don't hold a lot of meaning for me. Sometimes they do, but I'm just going to leave them on so the chart doesn't look quite so bare bones. But we can see, we've got this. Before when we're pressing up, we had this bottom come down here around 69,000 or so. What is this? 68.5. 69, 68.5, 68.3. So this kind of, 68.5 to 69 is, I expect if we keep going up, we're going to bump our head around 69K. I was saying last week and the week before that I wouldn't be surprised if right through to the halving, right through to at least mid-April, we were stuck between sort of the 70K and 62K on the bottom, this kind of this whole range right here. And I still feel that's probably the case. If anything, I do feel there's a slightly more chance for a bit of a sell-off than a run up pre-halving. And I could be wrong, but that's how I generally feel. So I'm always protecting the downside because of that. And in fact, some of the accounts that I'm looking at or manage, I will have slightly negative delta from time to time if I think the market's going to slide. And that's actually something we can get into a little bit more. But here we are. We've got a little bit of a rally today. It started just, a couple hours before the call here, kind of broke out of that range where we're at 67.5 right now. Let's see where it goes up. Again, I don't expect it to go much above 69 if the strength does continue, unless there's some kind of a news play or something. But that's where we're at. When we haven't really done a lot. We're down here on some of the discretionary accounts. I was happy to sell put spreads down here in the low 60s, high 50s. Do that all day long. Short term, obviously, you have to be a little closer to the money, selling those put spreads. On the bounces, I was selling very short-dated call spreads, but very gingerly and far from the money. I'm still weary of the upside, but not a lot to report. Again, I don't really want to. ETH is practically doing nothing right now. It's like watching paint dry. Let's be perfectly honest. At least for me, I haven't been very interested in it the last few months. So that's sort of where we're at with Bitcoin. I don't really have any grand things I want to say or big predictions, except, hey, here's the top of the range. Here's the bottom of the range. Let's just expect it to bounce around here until the halving sorts itself out, and then we're going to see where we're at. So that's about all I can say about the charts right now. It's been light trading.
It's worth me saying that, I'm watching the inflows and outflows TTFs, and we're seeing like an average in or outflow of plus or minus 1,000 Bitcoins a day, which is equal to the supply from mining. So it doesn't really mean very much, right? There's no real macro effect going on there just yet.
Yeah, we're sort of in a state of flux, and it'll be interesting to see because I think there's still a lot of questions out there. What will happen post halving? You see articles with different opinions coming up all the time, but of course, time will tell. So. If we look at the vol surface, we see that, longer dated calls are still, that's where the skew is, as per usual with Bitcoin. So, the market is still, the sentiment is up longer dated. What are you laughing about?
We just got filled on the Synth Miner account. We just closed out the 5th of April position.
Oh, excellent. Well, let's segue into that then and take a look at the Synth Miner account. And we can also look at our incredible altcoin positions. I'm using that term very loosely. Yeah. So
entire screen one. There we go. Share.
I'll talk about this later. But let's go ahead.
Yeah. So here's the synthetic miner, and all it's doing is selling put spreads and rolling put spreads when they're wrong. We until literally 15 seconds ago, we were short the 65,000 puts, and we had an order in to close to pay 11 bips to close, and it literally just got triggered.
Okay, and that's tomorrow's expiry, right? Yeah.
Tomorrow expiry, yeah. I think we were kind of happy to let that expire anyway, but better safe than sorry. Okay, we lose 10 bips. We budgeted for losing 10 bips because we tend to sell these spreads for 80 basis points for 7 days or thereabouts, 10 basis points a day plus 10, and then we buy back at 10 basis points. So in terms of the account, we've now just got positions that we rolled out to end of April or May, and then we rolled back to mid-April. So now we've just got 3.3 put spreads on the 12th of April. And actually they are looking fine because the net that's exactly what I would sell if I was going to sell new positions. Because you're selling for 100 basis points and you're paying 16, so your net 85, so that's your 7 days times 10 plus 10 plus a bit. So actually I wouldn't want to move these at all. These are fine, these positions. And actually, since we've got 0.3 of them, and this is a tiny account of less than 0.1 Bitcoin's value, I think I'm entirely happy just to leave that be and just do nothing.
Yeah, and the question I was going to ask is, I wanted to say, well, do we want to throw something on the 19th, or maybe move 1/3 of that position we have out to the 19th to maybe get a little more intrinsic and smear out some risk?
Yeah, we could. Let's have a look. If we
maybe
paid
take
100,
some of the 0.2,
we paid 100 of the for 63, and sold 61 for 140, and then paid 40 for 54s.
And for everyone watching, the reason why I'm saying that is when we can, we want to reduce concentration on any one expiry and or strikes. It's just, just makes life easier if you do get a move against you. And in this case, if we can pick up some more intrinsic from it by doing that, that'd be quite nice. And move some of that, if the market go down to 62 in the next 20 minutes, and all of a sudden our position that's looking pretty good will be, okay, we need to adjust. So it'd be nice to buy ourselves some more time and take care of that.
Okay, so I'm just going to put the order here. I mean, we might have to go to 105 to get across. Actually, I'm sure certain that we will. We might even not get filled here at 105. Let's have a look. Yeah, market's just coming down a bit.
Yeah, let me see here. I mean, well, we just had a little spike up, so we're just slightly off highs. So
I think it's just injected a bit of vol into the market and spreads have widened. So it's just.
Yeah, and it's interesting to note for everyone trading today. So I sat down this morning. I'm on the road today in Vienna, but I sat down and my account equities were up on so many of my accounts. I'm like, what the hell? Of course, vol's collapsed, I'm not going to say collapsed, but they went down quite a bit, like probably 6 handles.
4 volts.
And it made a real big difference on my P&L, which was always nice to wake up to that. But I think it's about, what's the vol right now? 70.2. So yeah. And we were surprised that vol held like over the Easter weekend. It didn't really change too much. I thought we'd have a real sell-off, but we didn't. So, and here we are with the price going up, but vols aren't rising in sympathy, which we usually see. So that kind of tells me that this probably isn't a real rally. It might kind of hang out here for a few hours, a few days, who knows? But I wouldn't expect it to explode up to 72 anytime soon.
Yeah, here's the graph, courtesy of Immersive Finance. You see that normally when spot rises, you see vols, particularly the 1 week vol, will rise with it, but here it's collapsing. And that's kind of tells me that nobody's short super close to the money calls right now.
Yeah,
and in fact we held off writing close to the money calls as well.
Yeah,
because we just were worried about there being a bounce at some stage.
Yeah. I mean, if the market exploded up to 70 right now, I'd be perfectly happy to sell some call spreads up in the 70s, especially near the all-time highs. No problem. But you're right. Just in this range, I don't want to sell in the middle of the range. It doesn't make any sense. Actually, why don't we take a quick look at the options data? Because I think the most of the open interest was at 70 and 80 in the next 30 days, if I'm not mistaken.
So I'll just say I'll leave this order in at 105, and if we get filled, I'll go and sell the 19th of April. What do we say? 61.54, something like that.
Something like that. We're doing that. We're doing that for more intrinsic, right?
Just to get more intrinsic, yeah.
Yeah.
But we're not really. We're actually lowering the theta, but that's fine. This is all about the intrinsic. This game. Yeah. Options data.
Yeah, and this, I mean, I think the last time we checked it was probably a few days ago. But this is a really handy tool if you're obviously using Deribit if you're here. So you go into the
so
data.
here I'm going to reduce the date range down to sort of 30 days.
Mm-hmm.
So we're only seeing the next the strikes for April.
Yeah.
So this is all April's. You can see a massive spike here at 7,500 contracts at 70k, and then the next up at 80, and then down here at. So you can kind of almost imagine people selling the 70s and buying the 80s as cover or something like this.
Yep.
And the 75s.
Yep. And on the far left, you can see the ratio of calls to puts. And as normal with Bitcoin, you usually get double calls to puts. I mean, it's not quite double here, but a lot more calls and puts.
And then down here at 66, we've got open interest at 66, 65, and a bit less at 64, and some here at 60.
Nice.
Yeah. I want. Yeah, it'd be interesting to know whether that's dealer long or dealer short. I don't have data on that yet.
Yeah, we need to get with the inside crew. Hey, would you mind just taking a quick look at the vol surface, the visual vol surface that Deribit offers, just to see what that skew looks like? Okay, hasn't changed much. All right.
The massive downside skews disappeared. There was a big worry about that, wasn't there, over Easter? It seems to have gone away. And we've just got this massive, expiry tomorrow. So we've got a vol spike tomorrow. Weekend, of course, no one expects markets to move on weekends, which of course is something to watch out for because they'll sometimes do.
Yeah.
And then you've got this zero, but vols rising into, well, actually, even end of April post halving is falling away in vol now.
Yeah.
May is 70. June to get back to where you were in vols, you have to go out to September.
Wow. Yeah. And of course, this, vol surface can change quickly. It's not, the longer dated ones are obviously slower to move, but those short dated, they're all over the place. That's just, feeding.
I can imagine that as the post expiry, the post halving expiry, the end of April expiry gets closer.
Yeah.
Those positions are starting to sell off quite hard. So if they remain at high vol, then people will be losing money quite quickly, so they'll be buying those back. They'll be so if people are long those options, which I imagine is the majority, because there'll be a bit of long vol play around halving, right? People are now thinking, okay, I'm losing too much money on those, so sell them. So that's dragging vols down even more.
Yeah, and they're starting to decay really quickly now. That's really starting to pick up. So, hey, let's quickly just take a look at some of the altcoin positions. I don't think we have anything to do there right now, but let's quickly look at those, and we'll talk about our strategy for, if Bitcoin doesn't go anywhere for the next, short foreseeable future, what the hell are we going to do?
So there's your Matic strangle. So we're right just in the money on our puts on Matic. Market's at 0.912, and we sold the 0.92. So,
and just for anyone new who didn't watch last week, we decided to sell iron condors on all these because we're not familiar with them at all. The market's very illiquid yet. They're a brand new product. There's not a lot there. And Richard, you could probably show them that we are all the open interest in some cases.
Yeah, so here's our cover at $1.12. In fact, so we're sorry, not even our cover. This is our short position at $1.12. The screen's locked up. Oh.
Yeah, you have to refresh.
Yeah. Here we go. And you can see the open interest here is 5 contracts, and we're 5 contracts. So we are all of the market there. So I'd love to close that out, but I've no idea what I'm going to have to bid to get that back because there's no market there right now.
Well, this expires tomorrow, right? So I think our plan for this one, I think we're just going to wait till tomorrow morning. If the market drops, we'll manage this April 5th, and we're going to have to move it, to probably the 12th or something.
Yeah,
in order to make that.
I mean, because you're chewing up quite a lot of money in spreads on these thin markets. So we could push it down to, what is it currently? 91.
Well, let's
push it down to kind of 88 or 86 even.
We'll just see what we're presented with tomorrow. Maybe it'll expire out of the money, and we'll just keep money from both sides. But the other two was Sol and XRP. I think we're right smack in the middle. I mean, those are April 12th. Those are next Fridays. But well, those are just doing exactly what they're supposed to be doing.
Sol was about here a week ago, wasn't it? 89.
Yeah, I don't think it's moved a heck of a lot. I mean, we're not watching these. We don't know these assets, and it's a new asset, and options on Deribit on these is new. So we wanted to be very careful getting into it. That's why we thought we'll sell some iron condors. We sold 10 deltas, roughly 10, 12 deltas. And we're just happy to maybe just make a little bit of money, see how it reacts, see how things move, see how the vols respond, and just see how it goes.
Yeah, I have a feeling that vols have come off a bit, but I can't quite remember what the vols were when we sold them.
Yeah. All right. So we've got basically nothing to do on any of these altcoins.
Yeah, and there's XRP. Yeah, nothing to do there.
Yeah. So we're just going to wait till tomorrow morning for the Matic to see if it expires out of the money. If so, we're going to walk away. If it's going to expire in the money, we'll just roll that position to probably the 12th of April as a put spread. I don't know if we'll put another iron condor on, a call spread as well. I have no idea. Let's just see what data we're presented with. We might just put the put spread on. But there's not a lot of activity here, so it's a little tough to trade. So you got to kind of tiptoe through the tulips, so to speak. All right. We're closing in here. So, Richard, I think we wanted to discuss, and we see this a lot. We've been seeing all kinds of articles over the last month. People saying, "Oh no, there's no way this is going. The true value of Bitcoin is 52 or 35." And we've seen all these different articles. Other people saying it's 100. It should be $1 million already. What's happening? At some point, reality has to take over. We know the supply demand. We're long-term bullish on Bitcoin. If everything goes according to, quote unquote, plan, we should see an appreciation in the price of Bitcoin. We think, okay? But that might not happen till May. It might not happen to September. It might not happen until 2025. What if we do get a pullback, like a crazy pullback to 35 or something? It's going to scare the pants off a lot of people, and it might flush the market. Now, I don't think that's going to happen for a bunch of reasons which we don't get into, but it could happen. Anything can happen. What are we going to do? What are we going to do? Maybe 55. It's going to settle at 55,000 for 3 months. Who knows, right? It can bounce along there for a while and then go back up. It'll flush a lot of people out. So what is our plan? I think our plan is to say, all right, if Bitcoin wants to screw around or go down for a little while before long-term going up, we want to have more Bitcoin in our accounts than when we started. So when it does come up, we can pat ourselves on the back and feel good about ourselves. And the way we're going to do that is sell put spreads when it makes most sense to do so. When we're pressing down, it's a nice time to sell some put spreads. Sell them behind defensive technical areas. So right now, 60 to 62 is a pretty big support area. Again, it could punch through, but I'm happy to sell put spreads in behind that. See how it pans out. If it goes through, we'll just roll. We'll keep adjusting. It doesn't mean we're not going to sell calls. Generally, I think we want to stay slightly delta positive, generally speaking. But we only want to sell calls when the market makes a pretty significant move up, or we can sell in behind areas of resistance. Now, the caveat here is that we have to actively trade a little bit more than we normally would. Like our synthetic mine, we just sit on our bloody hands all day long and let it do its thing and only act when we absolutely need to. If Bitcoin starts to go down and we think, oh, geez, this thing's looking weak, maybe we better be careful. Well, we're happy to get negative delta. We're happy to do that, not heavily, or delta neutral at least. Fine, no problem. But we're not going to stay that way, long term. So we prefer to stay kind of neutral-ish in general. If we're slightly negative, slightly positive, that's okay, because we can always adjust. If it starts making a big run up, we're going to sell puts like you wouldn't believe, or buy futures. If it really starts rolling off, well, we can sell perps. We can do things to offset that delta. We'll roll those puts out of the way. But the point is we have to more actively manage it, because our goal is to make more Bitcoin. So if it's in 6 months, bam, we're at new highs again, or we challenge the, sort of 75,000 where we stalled out before, and it wants to run through. We want to make sure we've got more Bitcoins than we did 6 months before. So, Richard, do you have anything to add to that?
So as a general principle, if you think the market is going down, or if you can see it trending down, then actually, a sensible trade is to simply sell perpetuals in the same delta as you've got Bitcoins. and as the market drops, those perpetuals will get converted to Bitcoins. So you'll have more and more Bitcoin on the account. And if you do that in the context of, if you, for example, sold strangles at high vol, and then you've hedged to zero delta with Bitcoin with perpetuals, as the market goes down, you're selling more perps into the move down to hedge your delta still. Your perps will come down, making your money down towards your puts. And if your puts, you either roll the puts or they don't get quite, they expire out of the money, then you've made money on the puts and you've made money on the perpetuals, which you can then unwind. And so you've pulled in premium from selling the puts, and you've created premium by taking profit on the perpetuals. And that works if you sold the strangle at a high vol. So if you think vol's going to decay from here, and if there isn't going to be a massive rally, I would suspect that it's possible that we go down to 65 vol, 60 vol again, right? I think people will be cautious below that. So you could sell a strangle now, pick up 10 vols in the vol movement, and pick up a little bit of as the market sells off, pick up a bit of premium from your perpetuals, and then as vols start to rise again, well, that's a good signal to buy those strangles back, neutralize all your perps positions, and start again from a book that now has a few more Bitcoins in it. I think
one of the things I was going to mention, Richard, I think a lot of people get a little frustrated sometimes. So the market starts to go down, and they're selling puts or put spreads, and they're adjusting and rolling. And maybe they are short perps, and their delta's neutral or maybe a little bit negative. But even though it seems like they're winning on these trades, they see their equity falling, and it never seems to get back up. And that's a frustrating feeling. But of course, the equity is falling because the asset value is coming down. But again, if you think we're going to go back up, then when it rises back up, you get a lot more bang for your bucks. I guess you have to be not get disheartened when it seems like you're doing everything right. It's like, why the hell didn't I double my account? Well, that's why. The value of Bitcoin, has gone down, 18% since you started doing this. So, remember that on the Deribit in Bitcoin, the delta display, or the net delta you're seeing, is your net delta hedged into Bitcoin. That is, if your net delta is zero, it means you're gaining and losing no Bitcoin on any incremental move up or down in the price of Bitcoin. If you want to hedge into dollars, then essentially if you take the number of Bitcoins you have in cash in the wallet and add that to your net delta, that's your delta in dollars roughly. And so if you sell that many perps, then Deribit will tell you that you're super short delta net. But actually, you'll be zero delta in dollars wise, and then as Bitcoin drops, you won't make any money, but you'll increase the number of Bitcoins you have while staying at the same dollar value. So if you think we're in a downtrend, then keeping a negative net delta in Deribit terms is the way to go. And if you think that we're going up, then actually keeping a zero net delta will still make you dollars. Yeah, exactly right on. Okay, and as usual, I'll mention also that if anyone wants to follow us on our trades, our live streams, please check us out. You can check out roguetrader.academy or patreon.com/roguetraderacademy and follow our daily live streams. Usually daily, sometimes we're traveling and doing stuff and we won't get one done, but normally we do one every weekday. I don't think we're going to have, we've got lighter attendance today because of the time zone screw up. Again, sorry about that for everyone who showed up an hour earlier and said, where the hell are you guys? Well, we'll see you at the regular time next week. But if you have any questions, throw them in right now for those of you that are here. Other than that, I think, Richard, we're pretty happy with everything. Everything went according to plan. The only thing that didn't go exactly according to plan was the Matic trade, but hey, we didn't know what to expect with these damn things. And as soon as we put those iron condors on, the market came down quite a bit. But it's interesting, Sol and XRP didn't really come down with Bitcoin. Again, we don't know these assets. So this is part of that feeling out discovery process as we start trading this new product, these altcoin options that Deribit has introduced. And so hopefully we'll start to see more and more liquidity and more participants coming in and trading those and make those robust markets. In the meantime, any last thoughts, Richard, before we sign off?
No, I was just trying to find some reasons for why Bitcoin rose 2% today. I guess a bit of relief that we didn't fall below sort of 65. It set the scene for people being a bit more confident to buy it. I think also the Fed has started to become they're saying dovish in the press, but they're saying that they're expecting a rate cut before the end of the year. But bear in mind that 2-3 weeks ago we were predicting 3 rate cuts this year, and now we're predicting maybe 1 towards the end of the year, and that's supposedly dovish. I think that's just the press trying to put a positive spin on stuff. So I think this is just random movements coupled with a bit of regaining of confidence.
Yeah, and tomorrow we'll see what the inflows and outflows were today. So if we have net inflows, maybe there's a little bit. But as we said, I don't know what the funding. I don't have my screen up right now. I don't know what the funding rate is. If it ever went positive,
0.
Usually we'll see it go. Yeah, so
funding rate 0.
So nobody's really kind of believing this rally right now, and we're right in the middle of the range. So
either no one's believing it, or nobody was dumb enough to sell calls into the drop, right? I mean, I know that we held off. We held off as long as we could. I did actually sell a call spread this morning because, and so you've got me to thank for the market going up. But even that, I didn't. That was 12th of April, 71k calls sold with cover up at 80 or something. Because I just didn't want to get involved at sort of 68, 67. That was too frightening for me.
I'm going to screw up that trade for you right now and say, "Oh, you'll be fine." Yeah, Park is a 72 in 10 minutes, right? Okay, fantastic. I again, when we have, it's fun to trade, but actually, it's more fun when you don't have to trade because everything you're doing is working out. So, let's just take this win, knock on wood, and enjoy it. Let's just enjoy it.
Yeah. So that's again reiterate. Trading is fun if you don't overtrade, and if you don't need the money. So only trade with money that is spare, and don't overtrade, because then you can enjoy the market movements, rather than fretting about them.
Yeah, don't fret. All right. Hey, until next week, let's see what happens. And again, feel free to join us at Rogue Trader Academy or Patreon, Rogue Trader Academy. And we'll see you next week.